Discussion on markets forward with Bhavin Shah. He's joining us from Ahmedabad, the founder CIO of Sameeksha Capital. Bhavin, afternoon. Thank you so much for your time. Bhavin, how are you right now in your portfolio? Are you comfortable looking at the prices? Obviously, I'm sure you've done very well. But versus the earnings and the trajectory, visibility of earnings your companies are throwing up, are you comfortable?
I think we are comfortable with what we own. We are because we actually exited some positions a few months back where we thought that the rally was a little too far-fetched, and so we keep evaluating every position with respect to the potential that company has going forward, and based on that, how is it priced and what's our incremental return opportunity. And if that doesn't look very promising, we decide to exit such positions. So in that regard, it's an ongoing process, and as a result, we want to be comfortable with whatever we own at any given point in time.
When I was looking at some of your large holdings, I understand wealth management is an area of interest to you. Earlier, there was just one single stock demerged from a large brokerage. Then we saw listings of other parts of the business of some brokerage. Then we saw demerger and one more Nuvama Wealth was born. We're talking of some more. But it appears that there's better representation of wealth management companies than AMCs. And of course, we are seeing what is happening in the country to flows and retail investors. Which end of this direct asset management would you like to own? AMCs or wealth management stocks?
Well, I think AMC is a tough business. Obviously, when there is a very sharp rally in the market, the AMCs obviously benefited and participate in that because through higher income. But as we all know that it has been very difficult for any large cap fund to outperform the benchmark. So index investing is taking shape in India, and it will only accelerate as time goes. And I think the AMC's yields are still significantly above the global peers. So there is on a longer term basis likely to be more pressure on the yields for the AMCs. And as a result, I have not been very comfortable owning the AMCs. While might and if you look at performance also of AMCs, they have been not very interesting. There might be a company-specific situation where a company is doing very interesting products, and I think as size is not against them, and as a result may be able to deliver growth. So we would evaluate that, but as of now, we are not really too keen on the AMC space. Whereas wealth management, basically they are handholding the customers. And no matter what, whatever technology, online, etc., ultimately that role of a relationship manager remains extremely important, even in the developed markets. And I think so when we look at India evolving into a much bigger economy, I think the wealth management industry will continue to thrive because they are able to shift from one category of products to another category of product. They can expand their product portfolio to like some of them have also have been doing insurance, for example, and as a result, their business depends on the overall growth in the economy and equity markets or capital markets in general, and second, the ability to deliver value to their customers, and perceived value is also sometimes important. I think I find that even sometimes when I approach a particular investor to invest in my fund, even though that person might know me, they prefer to get it vetted by their wealth manager. So that is how strong the wealth manager relationships are with their customers. And as a result, I think that industry, it looks very promising to me, and we continue to have a meaningful ownership there, and we'll probably look for some more as well.
That's a very fine point you made, Bhavin, because obviously you are running a wealth management outfit of sorts yourself, asset management company. So you know the fine points of that business. Let's talk about domestic pharma companies. You're sitting in the pharma hub of India, which is Ahmedabad. There was a very big block of 5,000 crore which got absorbed from a domestic pharma company yesterday, Mankind Pharma. I want to understand what kind of pharma names which you have, if you can share, or otherwise, how robust does the domestic end of the pharma story look to you?
Well, I think, from time to time, I've thought about what drives this domestic pharma story. And yeah, we are geared to the domestic pharma opportunities. We find that a little easier to understand. From time to time, I have thought about what generics can do. The government, also trying to push Jan Aushadhi and other initiatives. But I think it has had limited impact. I think the dependents, patients, rely on doctors, and that prescription-based approach continues to thrive. And I think the pharmacy industry works in a particular way, and I think it is we're not seeing that change much. Even with the online pharmacy options and so on and so forth. So I think that is why companies that have invested in building brands, obviously these are branded generics, but for companies that have invested in building brands and identifying niche opportunities and grow, I think they have done very well. And I think that is where we have been invested. I would think there will probably be some more opportunities also in that space in future, and so we continue to look at that.
Lovely. We are also looking at a time where crude oil prices are falling very sharply. Perhaps they are an insider of what's happening globally, but China, US growth perhaps. But it's working in our favor. But one sector which stands out, which is seeing good growth on load factors, is aviation also, and crude fall. One company has the lion's share, but competition is heating up. Others are also joining in. What are your thoughts on the prospects of aviation versus some of the valuation these stocks are trading at?
So, if you look at the history of aviation space in India, number of players have tried to build their market share in the space. Some have succeeded for some time, and then they eventually have gone by the side. And then one company, and Indigo, has clearly managed to gain share with every turmoil in the sector. Starting only say 2007 or 8 time frame, within every turmoil in the sector, they have gained market share, and they probably could have gained even more if so the likes of SpiceJet did not get support from whichever sources they got the support from. Today the industry essentially is duopoly. There are some small players who would probably try to build their business, but it's I don't think there is any other aviation market in the world, any other country in the world, where the number one player owns more than 60% market share. This is a very peculiar thing that has happened in India. And when industry has this kind of structure, anybody who has done sort of industry structure analysis, economics, would tell you that the leader is likely that the pricing behavior in the industry is likely to be very benign, and the leader is likely to really earn a lot of profits. There's another way to look at it. In any if you analyze the aviation business, the low-cost carriers have on the lion's share of profits. So whichever way you look at, there is the sector is, and I think if you don't have to do anything else, just look at the airfares today, what we are paying, and I think obviously when one has to fly by air, we're going to fly by air. So it's a very attractive proposition. The other important thing is that the competition, when you talk about Air India, the Tatas, multiple, they have a lot of work to do. They're obviously going to do a good, they're going to do a good job of consolidating their place in this industry. They have a lot of advantages as well, but they also have a lot of challenges. especially with respect to bloated cost structure, hodgepodge of in terms of aircraft mix, and so on and so forth. So their focus is going to be on fixing all that rather than trying to do price competition with India. So I think this is what it is, and I think it's when you look at how much air traffic is there in other countries, let's say China today, and India could be there in say 15 years. There's a long headroom for growth. So I think it's an attractive sector to invest in our view. I mean, company specific, obviously.
What are your thoughts on regional banks? J&K Bank, look at the last 1 year performance, forget the chart. South Indian Bank, Tamil Nadu Mercantile, Beat Central Bank, Bank of Maharashtra, wherever region is associated with the bank, I was quite surprised that not only larger banks have done well, but these regional banks have staged a very good turnaround. You seem to like this space. Which region are we talking about? Is it the west? Is it the Himalayas, that side, or is it the south? Give us some hint. Which region are you most bullish on in terms of banks?
So we we have exposure to the south. Actually, I think there are banks which have, I think, going through some transformation, better management, and I think it's showing in numbers. I think you mentioned some of the names as well. And I think, if that, they don't have to do anything incredibly different, rather than just stay focused on what they have done so far and continue that journey. And I think those banks will, if you are buying below book, you can imagine that, with the return on assets looking very, much better, the potential for further re-rating and then growth from whatever growth they deliver is still meaningful. So that's why we have invested and we continue to own that space.
Excellent, Bhavin. Wonderful chatting with you. Thank you so much for your time. We'll speak again. Always interesting to chat with you. We'll take a